world woke to a seismic shock in this dramatized scenario as headlines blared across every screen and news anchor voices trembled with urgency. Overnight, the very foundation of Europe's financial system was shaken, sending ripples of uncertainty through markets and daily life alike. It was a moment that in our fictional narrative changes everything we thought we knew about money, value, and the future of global finance. People everywhere tried to process the implications, from bustling trading floors to quiet cafes. The European Central Bank, a powerhouse that has for decades anchored the continent with the euro, suddenly announces a complete pivot, one that would redefine the economic landscape for generations. The world watched as officials addressed the press, their words signaling the end of an era. In this story, the euro is being phased out and replaced by a new digital standard, XRP, at a fixed valuation of $50,000 per token. This unprecedented move promises to reshape commerce, savings, and the very way Europeans interact with money, ushering in a bold new chapter for the continent. In this narrative, the announcement was preceded by months of careful preparation, all hidden from public view. European regulators, central bank governors, and international economic advisors have conducted secret pilot programs across the continent. Major banks in Paris, Frankfurt, Milan, and Madrid have been quietly integrating XRP-based settlement networks, stress testing liquidity corridors, and compliance frameworks. Story continues by exploring the strategic motivations behind the shift. In this fictional account, Europe faces mounting pressures, geopolitical tensions, dollar dependency vulnerabilities, and outdated payment infrastructure that can no longer keep pace with a digitized global economy. Inside the fictional narrative, the internal discussions were intense, with every decision weighed carefully. Behind closed doors, leaders faced mounting pressure to act decisively, knowing the stakes were higher than ever before. Senior officials debated timing, liquidity risks, and market perception, questioning whether their actions would stabilize or further disrupt the financial system. Each viewpoint brought new concerns to the table. Would markets accept such a radical shift, or would uncertainty trigger panic and volatility? The possibility of a dramatic market reaction loomed large in every conversation. Could public trust in a digital token rival that of fiat money? Or would skepticism and confusion slow adoption? The transition's success depended on widespread confidence. Experts argued over contingency plans for sudden adoption spikes, potential cyber threats, and the need for robust security measures to protect both institutions and individuals. The societal impact of moving from paper and coin to a completely tokenized economy was hotly debated, with questions about inclusion, privacy, and the future of money itself. As the story unfolds, the dramatized narrative examines how the public first learns of the change. Press conferences in Brussels become global broadcasts. Officials explain that the euro has reached the limits of its design, unable to efficiently support instantaneous trade, programmable contracts, or the scale of interbank settlement needed in the modern world. The narrative expands to explore international reactions. Across the Atlantic, United States institutions scramble to understand the implications. Asia watches with intrigue, debating whether to adjust their own digital infrastructure. Further dramatization dives into the technical underpinnings of this radical shift. Blockchain engineers and financial architects working behind the scenes in this fictional account reveal that the XRP ledger is not merely a transactional tool. It is a programmable infrastructure capable of automating liquidity, interest calculations, compliance auditing, and interbank settlements at a scale previously unimaginable. So the script next explores societal impact in the dramatized scenario. Citizens now hold wallets instead of accounts. Merchants accept tokenized payment directly on ledger-enabled systems, and governments issue bonds and securities entirely in XRP. Daily life transforms. Payroll, pensions, taxation, and trade settlements happen at the speed of digital consensus. Throughout the narrative, political intrigue really amplifies the story's tension. European policymakers, negotiate quietly with international allies to ensure a smooth transition. Potential dissent is managed through regulatory clarity, public education campaigns, and transparent integration strategies. The narrative builds to its dramatic crescendo as the fictionalized world begins to see the first tangible impacts. Markets react instantly, institutions recalibrate, and citizen behavior shifts. Transactions that once took days are now settled in seconds. Treasury departments adjust valuation systems, and international trade begins flowing through the new XRP-based rails. As the story reaches its final act, the dramatization emphasizes the long-term implications. In this fictional universe, Europe's move sets the stage for a new era. Borders blur in financial terms, trade friction diminishes, and global reserves pivot toward tokenized assets. The dramatized script leaves the audience with the sense that, history has pivoted. We are witnessing a monumental shift, a turning point that could redefine the very fabric of our financial systems. In this fictional account, Europe's adoption of XRP represents not just an economic decision, but a declaration of technological sovereignty, an assertion that the continent is ready to embrace the future of finance. This move is more than symbolic. It's a strategic pivot towards a more integrated and efficient financial ecosystem. This is a blueprint for a future in which finance is instant, transparent, and programmable. Imagine a world where transactions are completed in the blink of an eye, where every financial move is visible and traceable, and where the rules of finance can be coded into the very fabric of the system. Disclaimer: please remember, I am not a licensed financial advisor. The content presented in these videos is purely for entertainment purposes. I always encourage viewers to conduct their own research and consult with professionals before making any financial decisions. Thanks so much for tuning in. If you enjoyed the video, please give it a thumbs up and don't forget to hit the subscribe button. Also, make sure you turn on the notifications to be the first to know when I release new content. I'm excited to catch up with you in the upcoming video. Take care.